Everyone, welcome back to the Property Finance Podcast, and today we're carrying on the FAQ series. A question that I get asked quite a bit is, how much can I borrow? Now, this varies product to product. So I would say on buy-to-lets, commercial mortgages, it is all about the rental. So your personal income doesn't really come into it unless you're top slicing, which is a completely different episode that we'll cover. But really, your income doesn't really come into it. It's all about what's the rental of that property and does it cover the debt service coverage ratio? So normally on a limited company, that'd be 125%. So your income or the rental income needs to be 125% of the mortgage payments. If it's in your personal name, normally it's 145%. Now, what you can do when obviously looking at this, how much can I borrow, is you may have service accommodation, for example. And what you might find is that if you have a service accommodation property, you might go to a lender and say, right, how much can I borrow? And they may have to go off the buy-to-let income, for example. Now, the reason why some of the lenders do that is because then obviously you can attract a lower interest rate because you're going off the buy-to-let income, therefore bringing down the risk, as opposed to going against the service accommodation income, which obviously inherently brings a larger risk with it, because if you don't hit the income that you're hoping for, then obviously your mortgage payments are going to be larger because the amount you can borrow is going to be larger. So when it comes to service accommodation, you can go one of two ways. You can either pay a slightly higher interest rate and potentially go against the service accommodation income, therefore allowing you to borrow more against that property, or you can go against the buy-to-let income, borrowing less potentially as a loan to value, but obviously bringing that interest rate down as well. Same goes for HMOs. When it comes to commercial and semi-commercial properties, obviously you're looking at the lease income and obviously the break clauses that are involved and everything else. So when it comes to how much you can borrow on a mortgage, very rental driven, and that obviously is going to be the main factor that they look at. When it comes to bridging and development, when you come to a bridging loan, for example, the amount you can borrow purely is property driven. So it's asset-based finance, and they are looking at, right, what's the asset? What are you planning on doing with it, etc. Okay, we will lend you X percentage against that. They don't care about the income. They don't care about anything like that. It is purely, we will lend you X percentage of the property. The reason being is because obviously there's no probably rental income coming in. There's no mortgage payments to be made. With bridging finance, obviously you tend to have the interest is retained or rolled, so you're not making those monthly payments. So from that perspective, they don't have to worry about, well, is this affordable or not? They just need to make sure that the deal can cope with that interest payment. And the same goes for development finance as well. So obviously they're looking at the overall deal. They'll lend you X percentage of the GDV as opposed to what it's worth at the moment. So again, they're looking at, well, what's it going to be worth when it's finished? Right, we'll lend you X percentage of that. And then they work it backwards, as we discussed in previous podcast episodes, kind of how they calculate that. So when it comes to what can I borrow, when it comes to buy-to-lets and obviously any kind of mortgage like that, it's all rental driven. When it comes to bridging and development finance, it's all asset-based. So when you're looking at figures like that, obviously bridging development, your standard bridging finance is going to be 75% loan to value. Standard development finance is going to be 65% loan to GDV. That gives you an approximate idea. If you want to get a better idea of what you can borrow, best thing to do is head over to the website, so the propertyfinancecollective.co.uk, and you'll find links to our calculators there, which we've got one for bridging finance, one for development finance, one for HMO mortgages, and we've also got one for refurb loans as well. You can have a look at all of those and get a pretty good idea fairly quickly of what you can borrow, percentages, interest rates, everything else. But otherwise, the other way to find out what you can borrow is obviously make contact with us and we'll let you know pretty quickly. Thanks very much for listening. Catch you on the next one.